All right, recording's rolling. Appreciate everybody joining here for another educational stream as well as an analysis stream. We're going to be looking over some plays today. We're talking about this before, but Bitcoin, ETH, XAU, some NQ, ES, US 30, a lot of the mains indices today, as well as our majors, right? What's going to be moving, where the most money's in, right? Because that's where I'm going to be most interested when I'm looking for my trades. I want the biggest moves personally, right? Because I am greedy in that factor, so I'm going to be moving into markets, right, that offer me that profitability, which right now, historically, every summer, Forex is slow, right? These markets are slow. Besides these indices, these big names where people are going to put their money, logically, they're going to put it where they trust, right? In these bigger named assets that have these higher year-long returns that they can trust, right? So that's why I'm directed my attention during the summer, right? And it doesn't have to be just during the summer, but this specifically for the money flow, right? Order flow through the markets. I'm looking at these indices. They're offering the most profitability in my perspective. So we're going to be going over ETH today and Bitcoin, understanding ranges. That's why I wanted to do a little bit of range trading with you guys today to understand where we can actually get in trades, right? Where we can have take profits within certain ranges. When it gets to ranges, it gets very, very confusing with a overall directional bias because you have different breaks of structures in different areas on different time frames, and it can be very, very confusing. But just understanding our overall range, understanding where we're at within the range can give us a better understanding overall of directional bias. Because one thing I did want to tell you guys, when we are in ranges, right, from a institutional quote unquote perspective, right, price is balanced. So retail, the uninformed, money is being flowed into the market equally, right, up and down. There's an equal amount of shorts and an equal amount of longs when we are in ranges from the uninformed money, either trying to catch a bottom or trying to catch continuation, whatever it is, right? Trying to short to the downside, catch a bottom, catch a top, whatever they are looking for within those scenarios, right? We understand that we wait for the liquidity to be purged, wait for the introduction of demand or supply so that we can look to take our trades. But the uninformed money doesn't understand this, right? So we get into areas where price starts to consolidate, and this is where we start to range. Now, this can be very, very annoying, right, for some of us traders, even swing traders who don't have many opportunities within these ranges, right, because price is just moving up and down, and taking liquidity, right, to the upside, to the downside, creating buy side or sell side liquidity. And from that, right, we see an either continuation or a reversal. And this leaves many traders not in trades. This leaves them without opportunities, right, to get in trades. And then they're very frustrated because they just wasted, let's say, if this was a daily range, right, weeks and weeks waiting for a bottom or an accumulation that just ends up taking off, never comes back to their demand zone that they finally figured out or found, right, through waiting all of this time, and then from that price just continues. They long up here, what happens, right, distribution, and then from that they're out of their trade, and now they're like, what happened? So when we're getting into ranges, we need to understand that we're either looking for a continuation or a reversal, and this is going to be in confluence with where we are consolidating, meaning if we're consolidating on a higher time frame demand zone, supply zone, right? Certain areas filling imbalances. If we're in the middle, right, of equilibrium, there's not much price action over here or liquidity, and we're just ranging. I need more breaks of structures. I need an introduction of demand or supply within this area to even show me that I want to take price wherever I want to take it, right, within a certain scenario. But with ranges, we need to either understand one, we're in a continuation phase, or two, we are in a reversal phase. And this is going to come from now our Wyckoff perspective, right? Our redistributions, our reaccumulations, or our accumulations and our distributions. Now, I teach behavior, right? I don't teach labels a lot. We'll get into labels eventually. But with Wyckoff, it can be very, very confusing because a lot of the times traders get into trades where they just place a bunch of labels, right, and then their accumulation turns into a distribution, and then they're out of their trade and they don't know what to do. But with Wyckoff, pairing it with other confluences, just like anything else we would use, right? If we were using indicators, we need to pair it with other confluences for confirmation. We understand that Wyckoff itself is not just confirmation, and we need other perspectives, right? Other ways to show us that a certain market wants to move the way it moves. So we'll talk about the range that we were in for ETH the other day, how the reversal actually came into place, why it came into place, so you guys can start to understand, right, and make sense of why price is reacting at certain areas. Because with smart money concepts, this is a very, very broad statement, right? But if you can ask yourself, and this is just to learn, you can go look at the chart and say, why did price react where it did? Literally just ask yourself why. Then you can start to learn a lot more than you thought you knew before. Instead of getting mad at it and saying, oh, it wicked me out, stopped me out, why did it stop me out? Go back and look why it stopped you out. And then say, oh, I was a little bit too early. I was an early long or an early short, right? So we're going to talk about our range right now. We'll talk about how to get into our range, and we'll talk about how to trade our range. Now, one of the most very, very important things when trading ranges to me, right, is personally understanding where we are at as far as premium or discount, right? So this is a very, very simple statement. We've talked about this a lot, right? But for the people who are new or don't understand what premium and discount is, basically after an impulsive move occurs that breaks structure and leaves an imbalance, so we have candles that are left behind that have not been filled, right? Price is just moving up, and candles behind have not been filled. We have areas of demand. We're looking at structure, understanding our range. Once our higher time frame range is created, then we can use lower time frame market structure as well as supply and demand, and understand where the liquidity is to be able to understand what type of trade we are going to take. Now, if this is a reversal situation, either an accumulation or a distribution, we are going to be looking for whether we are quote unquote consolidating in premium or discount. And why is this a term, right? Why is this something that I want to understand? So with the logic with premium and discount, as an algorithm, as an institution, logically I want to buy low, right, and sell high. I want to go buy a house, I want to buy a cheap house, and I want to sell that house 2-3 years down the road, right? 2 times, 3 times, or with a certain amount of percentage profit, I want to get something out of that, right? So as a market maker, as a higher entity in the market moving price, I want to buy low and sell high. So what am I going to do? I'm going to go to extreme points of the ranges, and I'm going to buy low and I'm going to sell high. So when I'm understanding where we're at in our range, if price is lower within the range, right, we are showing manipulations to the downside as well as the creation of buy-side liquidity, maybe tapping into higher time frame demand from an impulsive move to the upside to the back over here, right? And the range has shown me that buy-side liquidity has been created this entire time on this side, right? I have a distribution, and then I have an accumulation. Now, what does that tell me? That tells me this is now a reaccumulation. And because I'm still respecting my higher time frame low over here, that caused this new high, as well as showing my range that was created, as well as accumulating in the lower half of the range in demand, right? And then I receive breaks of structures upside, another impulsive move showing me demand is shown. I can look for now my new demand, take that trade, and now target that higher time frame weak high that was formed within this entire range. So understanding that we are accumulating in our lower half of the range is very important versus the higher half of the range, right? Because if I wanted to think of something as an accumulation in the higher half of the range, so let me go ahead and get rid of all this. But let's say I see price move up, creating higher highs, higher lows, and then I see something like this, right? And we're like, oh, okay, price is accumulating, it's creating buy-side liquidity. Yes, this could be a valid trade for this demand zone here, right? Price might come up, create a new high, but this is showing me, right, that all of these longs that are getting in these trades, these equal lows that are being created within the higher half of the range are late, right? They are late longs. So now that I'm consolidating right within the higher half, within premium of my range, I'm still looking for sells. I still need the introduction of supply. So I see bullish market structure. I see price create a new high, and then we wait for the low to be created, right? That UTAD, up thrust after distribution, that was formed over here. And then we now have our new supply that is formed within these areas, fair value gaps, right? And we can look to take those trades within those areas, another accumulation to the distribution, and now target the higher time frame range. And this will be shown with the play that I'm going to show you right here within ETH in this range. So let's go ahead and now go to the charts, stop with the talking, and see how we can do this in actions. So I get rid of this. Alright, so let's go in replay mode and let's put it right about here. So let's understand our higher time frame range. Those who have been with me and in these streams, we know that the range that was created here, right? Obviously, price broke structure to the upside internally. We respected demand, and from that, we saw that continuation that we were talking about, right, to the upside, into higher areas of supply. But let's draw out our range. So looking at where areas have been filled, right? Areas with imbalance. Looking at our higher time frames, I can see, right, that this high caused this low down here. We still have areas, price came up into this, right, this fair value gap right here, this imbalance right here, then continue to the downside, put in that distribution. So I have this high right here that caused this new low right here. And from that, I'm going to be building now my higher time frame range. So understanding that this was my higher time frame high that caused this higher time frame low, this range is now built, right? So I understand, right, that we are in premium, so I have the possibility now to look for possible short positions, but this is still a daily chart, right? We are in bullish structure, so I'm not going to be looking for any of those trades at this point in time. So let's go ahead and bring it down to the 4 hour now. Move this over. And let's play a few more candles. And this is where we start to range, right? This is where price starts to consolidate. This is a 4 hour chart, so on the lower time frames, right, we'll see the price action moving up and down. But this is where we begin our range. So understanding now our most recent range, I'm going to be looking for the most recent low that caused the most recent high. This is a 4 hour chart. So I have the most recent low here that caused the most recent high here. When I draw my ranges, I use the most external points as the wicks obviously carried liquidity, right? Fractal supply and demand within them on lower time frames, just so I can understand my entire range, right? Just so I don't confuse myself. So now that my range is being created, right, on my 4 hour chart, I want, right, a 4 hour break of structure downside to show me now that price wants to continue to the downside overall from a high that caused a new low, right? Something like this, lower low, lower high, lower low, as well as this sell side liquidity that we have created down here. Possibly come down, take that, right? And then accumulate within these areas and actually make our bottom, right? But within this scenario, we are looking at our range, our most recent low that caused our most recent high. Remember, we are looking for imbalances, right? We can see price possibly broke structure right here to the upside, but we are looking for imbalances created within that. Do we see one? Yes, we do. So this tells me that this low caused this impulsive move to the upside. I have imbalances as well, so let's go ahead and get rid of this. Now I need our 4 hour break of structure to the downside. I receive one right here, right? If we're looking for areas of supply to possibly look to take this trade, we can look within this area, confirm it with lower time frames. So now I receive one. We are looking where we are ranging, so let's go to the 1 hour chart right now. And this is to take the trade out of the range, right? So this is if you don't want to trade within the range. We'll also talk about how we can trade within the range in a second here as well. But this is just for the overall move of how we can understand if we are reversing or continuing, right? So we are understanding what is happening here. We can see prices continuously taking highs, leaving equal lows, right? We are leaving a lot of equal lows right here. And then we leave equal highs right here. Price is showing still bullish market structure. from this low that caused this high. Right, price is still showing possible bullish market structure. This low does not cause a new high right here, so this is showing me a possible weak low has been put in place. This high is put in, breaks this low, so that tells me some supply is possibly introduced within this area. But at this point in time, I only have this one displacement candle. If I wanted to look to take this trade in here, I would look to confirm it on the lower time frames, right? So we are looking at this, right? We understand we need the 4-hour break of structure. We just received one. Possibly looks like a displacement candle, right? It's not too strong to me. I'm not even showing the volume right now, but I'm sure if I were to show the volume, it wouldn't be very, very heavy within this first within this drop move right here. But we received this move to the downside right here, and now I am looking because this low, remember, caused this high overall. So if we respect this low still, then we can still see higher prices overall. So now price comes up and rates the high, right? Takes out all of that buy side liquidity that we had before and takes out this high. So now this move, this demand that caused this high has done its job. Price came down, we have made the higher high. But look at our range and look where we are mitigating, right? So let's go ahead and go on higher time frames, go back, look left real quick, and see where we have mitigated this now. So we are looking at a drop base drop, candle of imbalance, continuation. We have an area of supply within here that we can see we violated. Our next area of supply holds right here. Now this is also another thing with smart money concepts. A lot of people or whoever, right, is trying to teach you, they might just show you this one, right, and be like, oh, this was the one, take this one every time, right? I tend to look at multiple areas within premium. Obviously, I want the higher areas, right? So I'm going to be looking at areas like this and areas like this to take this trade. But we are understanding all of these areas as supply and then using our lower time frames to confirm when we come into those areas. So we have our area of consolidation right here. Remember our drop base drop. So this was an area that accumulated and then distributed, creating supply. So let's go ahead and draw this out. Small little candle. We wanted to put this up to the hourly. Go ahead and look at our hourly candle before candle that caused that displacement. Hourly supply zone is formed. Right, we have our low that caused a new high now. So we still showing that bullish market structure, right? Imbalances right here. This candle or these areas are showing some type of demand, right? But if we are showing again still the creation of buy side liquidity still holding, right, higher within this range. So now this range looks like this. Still holding that premium, right, of the range. And this is showing me as we are holding premium of this current range, in premium of our higher time frame range, possibly coming up to mitigate supply, then I am looking to possibly take this trade at this point in time. Now I can show you guys the trade after we mitigate, right? And then we will show you after the range is broken. So price is still respecting areas of demand that caused this high right here. It's still putting in, right, that bullish market structure. This low that caused this high right here. So now I'm interested in this. I can still see price coming up to this area of supply. This is also showing early shorts getting in trades. So let's go ahead and take a look right here. Right, we can see our relative equal highs. So we have areas where early shorts got into trades. Let's go ahead and put our liquidity down here. So now this is showing me better validity or more confluence as well as to the supply zone. Why? Because we have early shorts getting in trades right before the supply zone. Liquidity that will be opened up into the market once the supply zone is mitigated, which shows that we could possibly have a large break of structure to the downside after mitigation. So price comes up. Let's go ahead on the 15-minute now and understand this range. This is when I get interested, right? Because price could do one of two things here. Price could reaccumulate and continue to the upside, right? And target higher areas of supply. Like back here, right? Maybe take out this liquidity, mitigate areas up here, or even go higher, right? This is completely up to the daily bias and how it is reacting, but we know overall we are still bearish, so I'm going to be looking for sells in premium, right, and buys in discount. So this is where it gets very, very interesting. Because as this price action occurs, I'm looking at now this most recent range. So this low that caused this high here, and understanding what I'm doing within this range, right? So let's put it out like this. This low that caused this high here overall, right? We see our range, we see price came up, came back down into an area of discount. So when we are utilizing our lower time frames, right, understanding our ranges, we can see that we can literally create ranges within ranges within ranges. And that's why I tell you I look for the same exact thing every single time, right? Because once I have that impulsive move, I draw my range, draw my fib, and then look for the introduction of demand or supply after a mitigation. But this is where it gets interesting, right? Because we have this area that was created. Go ahead and draw our most recent low that caused this most recent high. And then let's watch price action here. We start to create a lot of clean equal lows. This is where I start to get very, very interested in sells, right? Because as we are coming up to this area, we are creating more equal highs as well as more equal lows, right? A lot of equal lows. We saw the equal lows we created right here and right here. So this is telling me if we are on higher time frames too, this is a good way to look at this. If I'm retail, if I'm the uninformed, am I longing this? All day. I am longing this breakout all day, every day, right? I'm taking this thing to freaking 28.72 right now because it broke out of my trend line. My line is going to hold and it's going to continue to the upside, right? This is what they believe right now. But we are looking at our bearish market structure high that caused a new low. We are looking at the liquidity within, still understanding that we can continue to the downside if our area of supply is mitigated. We are seeing, again, more late longs getting into trades. What happens? Our area of supply is mitigated, and this is where I was interested because this displacement candle was put in, right? And many traders, I guarantee you, every single smart money trader or quote unquote smart money trader, whoever was trying to take this, saw this candle right away, right? And saw this zone, and they wanted to take this trade. To the downside, I don't think price ever came up to this zone. I'll show you right in a second here how you could have caught this trade within this once everything became bearish, right? But at this point in time, my 4-hour is still bearish, and this is why it is interesting because look, our high that caused a new low here, right? We have a lower high and a lower low that was put in. This high that caused a new low, we never closed over that, right? We just wicked it. So that's showing me that liquidity raid and then mitigation of supply, right? So on the lower time frames, I understand they are all looking at this, but I also understand this from a Wyckoff perspective. So from a Wyckoff perspective, right, we have our reaccumulation, our distribution to then accumulation that put in our UT, right, our up thrust. We have our sign of weakness after that, showing us the late longs getting in trades. If this was a bull flag, right, whatever they're looking at, just getting into trades right here. And from that, we can see more liquidity that is being shown, right? That sign of weakness is put in, and then we have that up thrust after distribution, right? That UTAD that is put in, and then following that, I'm looking for an LPSY. So I'm looking for a continuation, another creation of supply on lower time frames, so I can look to take the trade. So what this means, right, is I'm going to be looking for a redistribution, a drop-based drop following our UTAD. So if I am on lower time frames at this point in time, right, we've received our 4-hour break of structure, 15-minute break of structure as well. And then if we are looking for our hourly, we just got our hourly break of structure to the downside from this low that caused this new high right here. Price break structure to the downside here. So now I'm on the lower time frames. And let's bring this back just a little bit more. Right here. So 5 minute, right? 3 minute, 2 minute, 1 minute at this point in time. I'm on the 3 minute, 2 minute, 1 minute looking to take this trade. I need to see a high that caused a new low. A low that caused a new high, violated to show that that strong high was put in, as well as an institutional candle or area of supply, right, that I can look to take my trade off of. So on the 3 minute chart, if we are understanding this, let's let price play out. We can see us raid liquidity to the downside, understand overall. This high caused this low right here. So if we're looking at a lower time frame range, we can look at it like this. Price moves up, right? We start to create some equal lows. So I have liquidity that is being introduced, showing me early longs. Maybe people are trying to catch a bottom. Maybe they see this, right? Maybe they want continuation to the upside. We're on the opposite, right? So we start to see those equal lows that are formed. Price comes up, raids that range, raids that liquidity, so it takes out the high. So now the early shorts are taken out of their trades. If I'm on the lower time frames, the 1 minute time frame, I can see that this low here caused this high here, and that low has been violated. So now I'm looking for areas down here or areas of supply within here to take my trade off of. Let's go to the 3 minute chart. We now have a clean area of supply, so let's go back to the 1 minute. That redistribution that was put in on the 3 minute is looks like this on this candle right here. So we rated liquidity, introduced supply within these areas, confirmed it with this candle right here, and I now have a trade opportunity. Stops over the zone and or over the candle, however you decide to risk. Now either targeting 1, right, the low of our range here, because we don't have that full confirmation of the entire range breakdown, right, from this low that caused this high here to hold to areas down here of this range. But this would be our first take profit, right? And then we can look for areas down here from this low that did not cause this high on the 4 hour for continuation, right, to catch this trade and hold this to the downside. So let's go ahead and watch this play out now. Price comes back into that area, taps into it, and then we see that final mitigation to the downside, right? We are targeting areas of demand over here. We can take first partials, but let's go ahead and watch it play out. Right, our first take profit is hit at the range right here. Now we wait for possible continuation and or a reversal. Then I think we are accumulating. We're around. Or no, let's just go to the 5 and let this play out real quick. Yeah, I think we're accumulating around here right now. Oh no, we continued. Yeah, so we have our range trade that is in place, right? We have that introduction of supply, right? And then we have our final continuation, liquidity rate to the downside, takes out all of these equal lows, right? And then we see that push up. So your 32 to 1 is completed, right? All you did was wait, however long this was. If you were not range trading, right? 6 days, you waited a week for a 32 to 1. That is completely fine with me, right? I'll do that all day, because if we're looking at 2 to 1s, 1 to 1s every single day, I just tripled that, freaking 16, 17, 18 times that on just by waiting, right? Just by waiting a week. That's perfectly fine with me. I will wait for that. Now, if we want to trade within the range, this is when market structure comes in play. So we showed you the overall range, right? Where we were within the range and how we were able to see the Wyckoff coming into our zones of supply, as well as creating new supply, right? And then we saw that continuation to the downside from that. So let's go ahead and go out of replay mode. All right, we have that final price comes down to these areas of demand right here. So this ends up being a what? yeah, 64 to 1. Obviously, you'll be taking profits at areas up here, areas over here, right? So it's not going to be a full-on 64 to 1 on your account. But either way, very, very profitable trade, right? Risked not very much at all, made a lot. This is what we want to see, right? After we are waiting for all the early longs and the early shorts to be purged. And then from that, right, we are able to make money with the higher entities because we waited for them to enter for us to enter, right? So let's talk about how we can trade within our range now. So I actually wanted to go ahead and go to Bitcoin for this. And talk about our most recent range, what we're looking for, and what we could possibly see. So understanding that we had this accumulation, right, that broke out of our range and showed this move to the upside, but also understanding that overall we are still bearish, right, on a monthly time frame, put in this low right here. On a weekly time frame, we put in a possible higher high right here, and then a possible higher low within this area. We will just have to see, right, if price can show new demand, right, liquidate, and then break structure to the upside, show us that demand. But if we are looking at our weekly chart, this high right here, right, caused the most recent low right here. So we know we are still bearish on the weekly overall. On our daily chart, we are just looking at our most recent range. We can see this high that caused a low right here was broken to the upside. So as long as we are still holding this low down here at 17,690, then I can look for possible continuation trades to the upside if we are still showing that accumulation. Now I have one demand zone down here that was unmitigated. I don't remember what time frame I drew this on. Might have been the hourly. Let's go to the 30-minute real quick, possibly, or the 45. It might have been the 45-minute. Yeah, this candle right here. But anyway, so this demand candle that was drawn, right, caused this move to the upside right here. Obviously, we can see our most recent reaccumulation within these areas had been violated. Let's talk about why we got a liquidity raid, where supply was introduced, and where a trade could be taken. So, personally, I thought Bitcoin was a little bit more cleaner, actually a lot more cleaner than ETH was, as far as where you could have found the trade, right, found the continuation trade to the downside, targeted your liquidity, right, but let me show you exactly where this happened. So we had our move to the upside right here, right? That rated liquidity to the upside. So now I'm only focused on this price action to the right right now. So let's go ahead and go to replay mode, take this out, and look at where we're at. So at this point in time, right, if we are retail, what are we doing? We're longing, right? As the uninformed money, I am longing this. I'm longing this all day. I have a trend line breakout right here, higher time frame, right? Trend lines that I've drawn that are breaking out, right, to the upside. We can see the equal lows that are formed on every single break, right? Every single move, showing us the clean sell side liquidity that is being formed right here. Late longs getting into trades, as well as we are in premium. We have now, right, broke out of this range right here. So we are in premium overall. Peak premium of this range right here. So if I saw an accumulation, I could see, right, overall an accumulation to then distribution, a higher time frame drop base drop, or this could be a accumulation to distribution to accumulation, and we continue to the upside and we see a double bottom, right? It's completely to however the market wants to move it, but that is why we are trading what we are, right? So we can just wait until that happens and not try to predict anything. So understanding that we are in premium within our range, price is moving up, right? Let's watch what happens here. Price is creating higher highs, higher lows, right? And then we see a violation. These buy side liquidity right here, right, has been taken out. And then we see a break of structure to the downside right here, right? We have this area of reaccumulation. We see that break of structure to the downside right here. If I'm on my lower time frames, let's go to the 15-minute. We can see that break of structure downside here. area of supply higher within, or if we're doing the candle before the candle that broke structure to the downside as our intro of supply, I would look for price to hold this, right, and to continue to make higher highs and lower lows. So if we are at this point in time trying to get in our trade, right, same exact thing as before. Well, headset cut off right there for a second. Don't know why it did that. But if we are in this trade, right, we are understanding our range. Same exact thing as we were doing before with Ethereum. We can see that we are creating, right, that equal sell side liquidity, equal lows. Late longs are getting into trades as well as we are manipulating those highs. Remember distribution, right? Manipulating highs, leaving lows. With accumulation, we are manipulating lows, leaving highs. So that's how we get those reversals into place, right? So we have our area that is created, displacement candle that is formed. If we wanted to be in the trade, we could look to take a trade. Then targeting our demand zones, right? Our areas that were not filled within this range right here, within discount as first take profits, and then overall our sell side liquidity that was created on this move here. I would actually draw this range out like this. From this impulsive move right here, because this is where we introduce that sell side liquidity, right, as well as that demand that I have down here that I'm looking for. So I would look for a price to respect this, right, continue to the downside. What happens? We break structure to the downside, more supply is introduced within this candle right here. So if we see where we broke again, what did the following candle do? Come back into the candle before the candle. So let's go ahead and let's take this out, right? We get our first break of structure right here, second break of structure right here, right? That M is put into place like we were talking about, that simplification that I always emphasize. So let's draw that out. Right, that M is put in place, showing me my supply is being put in place. Where's our candle before the candle that broke structure to the downside? So if we did not get in on this right here, we have another candle before candle that broke structure to the downside here. Stops over the high. Targeting again our overall lows. And I'm looking for price to continuously respect these highs that cause these new lows, right, for the continuation, so that I can gracefully hold my trade, right, and continue to take this to the downside. Price comes back into those areas of supply, right, and then we see that final continuation. That's completely fine. Price was just coming back up into those areas to fill lower time frame areas of supply imbalances. And so the CEO, right, could get into more orders at that area, fill those orders. So we have our range that is being created now. We see lower lows, right, lower highs, lower lows. So I'm still looking for a continuation to the downside, looking to target these this liquidity to the downside, right, as well as we have our demand. And then from that, right, we see that final play out. It comes out of the range, liquidates these lows right here, taps into areas of demand right here, and now we are seeing, right, possible breaks of structures to the upside. So overall, on the daily chart, right, this does all look to be mitigated. So we could either come into this area of supply from this introduction here and continue to the downside. So I believe this is price 22.3, yeah, 22235. So I would look at this area as a possible area to short, right? I don't like the fact that we have buy side liquidity here. Just because the equal highs are there does not mean it has to be taken, right? But I would look for price to possibly create some type of sign of weakness, right? Show a lot of equal lows within this area as well as these equal lows, right? To show us more longs are getting in trades. So they think this is maybe a higher high, higher low continuation, whatever it is. To show us that, right? And then maybe a liquidation raid. And then from this high that caused this new low here, we take that, right? And then we distribute to the downside, then finally accumulate and start to go from there. We could see something like this, right? Or we could see price. So let me go ahead and get rid of this. Let's bring this back a little bit. Or we could see price, right, come down lower into these areas or even lower into these areas, take out all of this sell side liquidity that is being formed right here as well as right here. And then once all the early longs are then taken out of their trades, they can choose to possibly accumulate within these areas right here, right, and then continue to the upside from that. So looking around 18,601, right, we could definitely come back down, even take out this low here and show some type of liquidation rate to the upside. But we are ranging right now, so I'm not looking for any higher time frame swings. The move was caught here, right? Playboy called out the bottom. Amazing. We all got in that, right? We saw, right, price move out, price create all of that sell side liquidity, and this is why I wasn't very interested in longs at this point in time, right? Obviously, we got in the longs and we were out of these trades, but when we came back down into these areas of demand, I was not very interested because of all of this sell side liquidity that was created, and the fact that we came out of the range and then immediately broke structure to the downside, put in those bearish engulfing candles, right? And from that, we saw that continuation. So looking at Bitcoin right now, right, we have areas of imbalance on this move right here from this low that caused this high out of the range, but understanding that our demand that caused these this high right here has been violated, as well as this demand that caused this high right here has been violated. I'm still looking for lower prices, so we could possibly come up into these areas, right, before this candle right here. Let's go ahead and hide this. So this was our supply zone that we had marked on the higher time frame, right? But if we wanted to refine that, we could look at areas right here or even areas right here. I would want this area on the higher time frames, this displacement candle that was put in right here, break a structure to the downside because of the buy side liquidity that we have present here. So looking for our liquidity as well as our raids and then introductions of supply or demand are going to be very crucial as far as range trading and where price is going to move. Because you're going to see in ranges a lot where price does this type of movement. Higher highs, higher lows. That price action that we don't want to see, right? We are told and are actually taught mechanically, right, that we want to see higher highs and higher lows for the continuation. But this is when ranges occur, because what is this doing? Creating liquidity both ways, right? Obviously, this one's taking highs within this scenario, but it's creating liquidity, right, when we are ranging. So when we have higher highs, higher lows, this is showing me that dumb money, informed money is getting into either early longs or early shorts, and then that's when we use premium and discount as well as other factors to then get into those trades. So let me go ahead and get rid of this. Let's talk about some indices and look at pretty much our same exact scenario. So moving over to NQ now. Same thing, right? I have everything drawn out now, so I'm hoping if you're looking at this, you're understanding, right, the same exact story that we had here. So we can see price came down, right, took out the low, so I'm looking for an introduction of demand now. We see a liquidity rate to the upside, another liquidity rate to the downside here. Price breaks structure, so as long as it holds this low, I'm looking for this high to be taken. What happens? We hold this low, right? So this high is now taken. We are now in premium within our higher time frame range, right? We have an area, so this was a daily candle before candle that broke structure to the downside, right? And then we saw that displacement, continuation to the downside here. So I'm looking and saying if price comes into this area, break structure on the lower time frames, then I can look for a trade. So looking at it at this point in time, let's go ahead and bring this back. Replay mode here. Again, another range is created, right? This low that causes this high right here. We'll wait for that first displacement candle to be shown. So now I have some sort of area of supply within my higher time frame supply, right, that I can be looking to possibly take this trade off of. I now want my lower time frame confirmation, right, after we come into these areas to take this trade. So let's go ahead and draw my range. Then this low that caused this high here. I now have liquidity within it, right? I have my target, my intraday target. this buy side liquidity that was formed right here, right? That sign of weakness that I was talking about, that we were talking about, right? If we can show that same exact thing here, then that's showing me that more late longs are getting into trades, and I'm still looking for more downside. So let's let this play out a little bit. And this is where it gets very interesting, right? Because it's that same behavior that we are looking for. Notice, even in this range, this lower time frame range, right, from this most recent low that caused this most recent high, look where price moves. Only in that premium, right? As it's creating, again, those equal lows. So this is telling me that late longs are getting into trades. More sell side liquidity is being formed. There's more reason for this market to now come down, right? So let's go on the lower time frames. All right, we're looking for the Wyckoff within our zone for that confirmation. We come into this zone, right? We don't show any displacement from this low that caused this high right here. Not very interesting to me at this point in time. And this is, I believe it's 9:30 is when I'm interested, right? That's when we open up. That's when volatility is coming into the market. What happens? We open up, volatility comes into the market, right? If I'm on lower time frames at this point in time, we're still within our supply zone. What happens? Price raids that, but then immediately breaks structure. And this is why I'm very interested, right? Because at this point in time, this low that caused this high here is now irrelevant to me. I'm now looking for areas down here, areas lower over here, right? Because this is just a liquidity raid. So this move that was put in right here is showing me that all of these early longs were only able to push price up to here, right? For then algorithms to enter liquidity raid and then enter their short positions. So this is where we will get interested within our trade. So we have one break of structure to the downside right here from this low that caused this new high. I don't think it's going to show me seconds charts, but I hope it does. So we have, right, our supply zone that is formed right here. Price comes in and mitigates that. Right, so we're within our trade at this point in time. It comes back up into that supply zone, mitigates that supply zone. Why do I have this here, right? Why are we using this supply zone? Remember, this low that caused this high here was broken to the downside. Candle before that was this supply zone right here. And then that was validated when we again broke structure to the downside here. I hope it shows me second. It does. Okay, perfect. So we can see, right, that price came into this area, created these lows, and then was broken to the downside, respected these highs, right, that caused new lows. And for that, I was looking for that continuation, that M, right, double break to the downside. So we have our trade in place now. Remember, we are in premium. Let's go back to the 15, actually 5-minute. Trade is in place. We see that mitigation of that supply, right, on lower time frames. It grabs more, let's put that back, grabs more liquidity, right, to the upside, still mitigates our area of supply. It's still respecting this drop-based drop that was put in from this liquidity rate right here. In premium, in our supply zone, multiple breaks of structures to the downside, multiple confirmations. Now we are looking for the continuation to then the downside. What happens? Price continues to the downside, right? We have our range right here. So we are looking for areas of demand or areas to, right, take profit first. We can take profit here, look to partial, right, look to set stops to break even. And then I'm looking on the 15-minute at this point in time. I see now a displacement candle is being put in place or has been printed, right? So I now have another area to possibly look to sell if it comes into there. Our trade is taken out, right, from our sell side liquidity that we had. We want to look to see price continue to respect this. It comes into that area of imbalance on the 15-minute, break structure to the downside. What do we see? Price come into the next most recent supply zone. Let's go to the minute. I think it was the 3-minute actually. If TradingView wants to let me load. This is awesome. Back to the 3-minute. It doesn't like my 3-minute. Okay, so We have a liquidity rate to the upside here, right? Break of structure to the downside here. We can obviously see an institutional candle here. Displacement is being put in place here. Our imbalance is being put in place here. I wanted to show you, perfect, the 3 minute to show you the candle before the candle that broke structure to the downside, right? Our area of supply. This displacement candle that was being put in place right here, right? Price comes into that area, mitigates that, so you now have another available trade to take, and then look to now target that next week low that was being put in place, right? So we have a low that caused this high. Price came into this area of imbalance, broke structure to the downside, introduced new supply. So we are now looking at this as a week low, obviously from these breaks of structures to the downside over here and over here as well. So if we are looking to take a trade here, right? Go ahead and get in a short. Again, targeting now that week low, or areas of liquidity within here, areas of demand within here. If you want to be conservative, right? If you think price could possibly accumulate down here, but we see price come down. Now take out that week low, right? We are out of our trade, 26 to 1 on NOS, right? In roughly 2 hours, right? You just pulled a 26 to 1 on insane indice that pays so crazy, right? In 2 hours. So this is just about waiting, right? Just about waiting for areas to come and then waiting for that confirmation in those zones. But with ranges, the best thing I can tell you guys to do is simplify. The best thing I can tell you guys to do is simplify. So I just look for my range, right? My premium and discount from the most recent low that caused the most recent high. I look to see if we're either accumulating or distributing, and this can be shown if we are in discount or we are in premium, and how breaks of structures are being formed. And then I look for the final, right, that liquidity rate, as well as break of structure, to then find that final continuation, so then we can look for our trades, right, and then be out and comfortable and done, right? I know that everything that I did up until this point is within my plan, and from that, right, I will receive profit. If I do not, then there is a reason from that. I'm going to go back at the charts and I'm going to figure out why. But understanding that, right, obviously we came down into these areas, so overall, pulled a crazy trade, right, 75 to 1 on NOS over here, 29 to 1 overall. Obviously, it's going to be less than that because of partials that are being taken along the way. But you guys can see just by waiting, right, just by understanding that we are in our in premium or discount within our range, looking for the liquidity rate, looking for the introduction, and then entering on that confirmation, then we are able to get in these profitable trades and not be manipulated out of these ranges, right? So overall, just understanding if you are on a daily time frame, just taking this daily, right, supply zone, you still are in a profitable trade, right? It's still the daily higher high, or sorry, lower high, lower low, lower high, possible lower low. That we are looking for, right? That's still the overall plan, but we're just using our lower time frames to then confirm that once we come into those areas, and we can look for areas to then target overall. So I hope that helped you guys out with range trading. We're going to get into a more detailed range trade scenario on Thursday as far as this goes. I want to get into a little 5-minute range with you guys and show trades up and down the range, right? During like a 15-30 minute session to then be able to get you guys into that mindset, but it is still the same exact thing. If a higher high and a higher low is being put in place, then I'm targeting the higher high, putting my stops to break even. What happens, right? You might be in a range, and then price break structure to the downside, break structure to the upside. So it shows that liquidity rate, to the downside here. Then you have your demand that is being put in, right? You have this high that is being formed. You might still be in an overall range, right? Price comes into here and then takes out this, liquidates, and then goes to the downside. Is your trade wrong? No, not at all. Not even close. Everything was still there. Liquidity rate to the downside, break a structure to the upside, price came back down into discount, right? You're in your trade and you're targeting the weak high. What happens? Price takes out the weak high, raises the liquidity, and from that, continuation to the downside. That's completely fine. You still got the trade, you were still profitable, and your rules, your bias, right, was set in stone. So this is why, and this will help a lot too with not FOMOing into trades, because now all of a sudden you don't have to catch a bottom, right? You don't have to catch a top because you're only looking for this. And then you might catch a bottom or you might catch a top on a higher time frame chart, right? Overall. But we're just doing the same thing over and over and over and over again, right? To get that robotic like mindset within us and to not then get into positions to where we are emotionally trading, right? And from that, lose money. So I hope that helped you guys with the ranges. Like I said, we will get deeper into those smaller time frame ranges. When that comes time, I wanted to take a look real quick at gold as well. Talk to you guys a little bit about gold. We put in a possible daily break of structure. We can confirm that with a 4-hour high or low. Go ahead and go to the 4-hour now. My headset is dying. It keeps dying on me. It's all good. But if we can see, right, this most recent high that caused this most recent low violated, or if I can play this a little bit more aggressive, wait for an hourly break of structure to the upside. I'm still seeing a lot of liquidity that is being created within these areas. This institutional candle was mitigated right here, right? We could possibly seeing some accumulation. So if this high is broken here, or no, sorry, this high is broken here, then I can look for that continuation. If I show that impulsive move, right, then I'll look at this as a reaccumulation. Why am I looking at this as a reaccumulation? Same exact logic we had before, right? Price comes back up, it distributes, and then accumulates. Where are we accumulating? Lower half of demand, second half, right, of our range. So our first half of the range shows that distribution, second half of the range shows the accumulation. So that's when we're going to be looking at ranges as far as continuations, and these will be above major areas of supply or below above major areas of supply or below major areas of demand, because this is when new demand is introduced, and everyone who is looking at this, right, and saying I'm longing this, is not within their trade, or even this, right? Whatever demand zone they're looking at, when this huge, very, very obvious impulsive move is shown, then they're like, oh, okay, this is my demand zone. Wait for price to come into that. And then they check the chart 2 weeks later and it looks like this, right? And they're like, what happened? Price creates new demand, right? After that break of structure to the upside, we're looking for then that distribution, for that accumulation, break of structure, impulsive move. Then we look for the demand, and we can now take it to our higher time frame range supply that we have created, right, over at 1800. Bunch of pips on this chart. I love the way that gold is setting up right now. I'm not going to lie to you at all. But it's waiting a little bit more. Obviously, we're starting to put in some impulsive moves, possible internal breaks of structures to the upside, right, on the hourly. But we still have this sell side liquidity that is being formed here. But obviously, right, if we can continue to break structure to the upside and show that bullish momentum, then I will look for a trade, right? So, gold, very, very interested in this one. Pip count on this is insane. Yeah, insane. Roughly, yeah, 7,404 points. So you're looking at around 74 pips. Yeah, crazy, crazy, crazy move that you can make off of that on this gold play. Looking at ADA as well. Something I was looking at too from Casper, right? Our higher time frame analysis that he had. I had this daily, I believe, zone that I had drawn. Yes, had this daily zone that I was drawing cause this impulsive move to the upside right here. If the 4-hour can accumulate and then break structure from a lower high that caused a lower low. So if we see price do this, right, put in that impulsive move, then we can look for areas on the hourly to confirm that, take this out overall on the range. It has now finally hit my demand zone. So I'm more interested on that. I will be paying attention to this, and this will be posted if the play comes into fruition. But with Bitcoin and ETH, right, I'm still looking for a little bit more downside, so I'm kind of holding off on this one right now. Obviously, if we can continue to accumulate within these areas after we took these lows, mitigated these areas of demand, break structure to the upside, then I will look to take these trades to the upside. But Right now, I'm still looking for that lower time frame continuation to the downside overall. So I hope this helped you guys a lot as far as range trading goes and understanding where we are at as far as premium and discount to kind of simplify things, right? You're just looking for 1, 2, 3, 4, 5 steps, right? It's that over and over and over again. Premium and discount, supply and demand, liquidity rate, introduction, continuation, or reversal, right? That's it. And that's how we can now get this robotic mindset, this robotic mentality, like the algorithms do, right? To just boom, 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 slam orders in at certain spots and make a bunch of money because we are now in areas that are quote unquote protected and price will not come back to those areas. So, like I said, I hope that helped you guys as far as understanding everything. If there are any questions or anything like that, feel free to at me in chat, at me in stream chat, at me wherever, DM me, and we can get this sorted out if you still have any questions as far as these charts go. But remember, overall, we are still in bearish structures. As much as I want to be long bias, right? As much as I want to take this back up to 30K, freaking 38K, right? Our original breakdown, as much as I want to do that, I still need to wait for structure to then confirm. So I appreciate everybody that popped out. I hope you guys all have a good night. This will be posted to the YouTube. This was recorded. So once that is done, then I will have that up for you. But thanks again, and I hope everyone has a good night, and I will catch you all later.